Hello and welcome to FinextraTV. I'm Liam Xavier and you join us here at EBAday 2026 in Copenhagen. With me right now is Simone Satan, the Head of Digital Payment Solutions at BNY, and Axel Weiss, the Head of Payments at DSGV. Lovely to have you both here.
Thank you, it's our pleasure. So
if I come to you first, Simone, a lot of conversation around cross-border payments. What are you seeing as the primary change and the biggest either wins or obstacles right now?
So I probably see four main forces that really influence cross-border payments now already and will continue to influence. And the first one is really customer expectations. The second one is around the rise of instant payment schemes. Then the third one, I would call it probably regulatory and industry initiatives. And the fourth one is really new technologies. And from a customer expectation perspective, I would say, customers expect the same experience like what they have everywhere else in the digital economy. So they are now used already to domestic payments and the experience they make there, and expect the same now for cross-border. So taking out the friction, having a great unitive customer experience. So this is a key element. And then the other element which I touched on is the evolution, I would say, of instant payment schemes. So we have now roughly more than 100 instant payment schemes across the globe, and they are more and more evolving and also allow for interoperability. So with the one leg out or one leg in, however you want to call it, possibilities. So this is something that really influences cross-border payments also in the future. And then, like I already said, the other element is also around technology. So we have technology which are APIs, for example, where you can embed payment solutions directly into your payment systems, into your client front ends. So this is something that's evolving, but also, of course, other technologies such as AI, which you can leverage for certain use cases, also for fraud detection, for example, to make everything within the payment less frictionless. So that's a key element, how you can also leverage AI as a technology into your day-to-day payment processing. And also, not to forget, is also the regulatory elements or the industry initiatives. And one that's really strongly influencing cross-border payments is, of course, the G20 initiative by the Financial Stability Board. So which basically now forces banks to react, even if it's not mandatory from a regulatory perspective yet, but still clients or the banks have to fulfill and have to consider the reduction in cost, bring in the speed element and the transparency into the whole cross-border flows. So those are really the key forces that the industry is talking about when it comes to the development of cross-border payments.
So you mentioned about digitization there, you mentioned about a lot of different technologies. How has the role of correspondent banking changed in this area?
So I think it has changed significantly. So in the past, correspondent banks basically have given access, settlement access, liquidity access, but also the access to the different clearing systems across the globe. And now their role became much more central. So instead of banks that work with correspondent banks choosing the different rails and the different providers individually in the various jurisdictions, so they have one core provider that offers them access to all the different rails, whether it's instant, whether it's RTGS, or even if it's the emerging technologies such as the ledger technology, which we haven't touched on in our question earlier, which is also an important development on the cross-border side, but also they give a lot of value-added capabilities, and this can be mainly embedded also through APIs, whether it's like pre-validation services or also services that give real-time visibility into tracking a payment or streaming FX rates. So it's really everything that takes out the friction on those cross-border payments where correspondent banks play a role. But one element not to forget is really the compliance and trust aspect, and the resilience that correspondent banks give, So banks still need partners they can rely on when it comes to sanction screening, to all the AML requirements, but also to the different regulations in different jurisdictions. So that's why I see that correspondent banks play a much bigger role going forward. So they will be these trusted, reliable partners for banks to leverage, and this is how the relationships will continue to emerge.
Wonderful. And Axel, if we're thinking about, things have changed a lot. We've got different demographics, different generations moving into the payment sector now. But also, as we mentioned earlier, domestic payments have a certain experience, and now we want to get that same thing in faster cross-border. What is perhaps a misunderstanding you think the banks and FIs have around customer expectation?
Yeah, I think we always think that the customers are loyal to our products, to our banks, but things changed over the years, and in the last years we recognized that people have full transparency about services of other competitors, of other banks, of other providers, and they have not only the full transparency, they can change immediately to other products, to other providers. We have seen that in the cross-border area, that we had a market share and a loss of market share of 50%. And so there was a need to do something. And a driver in this case was not only the G20 objectives, because we said, okay, if we lose the contact to our customer, then in this case, for cross-border payments, then it could be that he would terminate the current account at all. And so we reacted, and we are in a cooperation with BNY and created a new product. And I think it's absolutely important that we reflect the customer needs. So customer survey is the first step, that's clear, to see what are the needs of the customer. Underestimated is also the pricing. You need a good pricing, competitive prices to satisfy the market and the customers. And we did so we created a perfect UX and tried to offer our customer at least the same that the competitors did. And I think that was a really good example to react on the market, to have a reaction and to fulfill the wishes of our customers. So it's absolutely important to have a look in the future, to see what your customers are doing. Are they satisfied with your product? If you have a message, no, there's something, and you see that you lose customers, you have to react and as soon as possible, because otherwise you will lose customers.
Absolutely. And you mentioned about cooperation there. People have been partnering for a long time, but has that evolved much now as we've got more rails to work with, more modernization? How has that partnership element evolved?
How can partnerships evolve? And it's a good question, because there's a clear need to improve it, to combine the strengths of both partners. I think that's very important, and also, it's absolutely important that strategies are aligned. It's clear that if one partner has one strategy that's contrary to our strategy, it does not fit. So it will cause a problem. And to improve such a partnership or evolve it, I think it's also, if you think about our partnership with BNY, it's very important that both have the same opinion about developments in the markets. If you think about OCTNs, that would make no sense if we would say, okay, we want to go in this direction, and the partner would say, okay, let's think about other things and ledger and whatever. So there should be an alignment, but also a clear demand from both sides. It should be clarified that what every partner wants. And then it goes in the right direction.
Fantastic. Well, some great insights from you both. So thank you so much for coming into the studio.
Thank you a lot.
Thank you.
Appreciate it.
Thank you.